Hello, everyone. I'm Jean-Claude at Beyond Mystic, and welcome to today's Beyond the Vault. This is the weekly update, of course, with Mr. Andy Sheckman. You can find his work at milesfranklin.com. Andy, welcome back to the show. How are you?
JC, I'm good, my brother. Good to be back. Thanks for having me.
How's your cold treating you? You were kind of under the weather last week.
Yeah, a lot better, thankfully, because I had some traveling to do. I'm actually back in Minnesota right now and here for another day or two. So, yeah, thanks for letting me out of last week. I felt bad about that, but boy, I got hit hard for a couple of days.
Yeah, it's been going around. I got it pretty hard too. A lot of our staff had it too, so we understand. So good to see you back in shape. Lots of news already coming out this week and last week also while you were away. Let's start with well, where do you want to go? I mean, there's a couple of things I want to talk about. There's the credit scores going down, deficit, of course, going up here in the United States. Costco is now selling silver coins, apparently. The BRICS nations are introducing this new international payment system. There's a lot there, but you sent me some articles as well earlier before the show. Where do you want to start with that?
I'll follow your lead, man, because you know what? They're all intertwined. They're all connected. All of these things that seem independent of one another, you put them together, and I think they have much more meaning. And so it doesn't matter where we start. I think they're all important.
Well, let's start with the Pentagon giving Ukraine another $300 million in weapons, even though there's a lack of funds to replenish U.S. stockpiles. Imagine how crazy that is. How does this tie into our global economy?
Well, you know, when you are giving another 300 million in weapons, and we're $10 billion in the hole in order to replenish our own weapons, you cross a road of stupidity. You know, we are first of all, we are insolvent. We're broke. We're running $1 trillion of debt every 100 days. We do not have the money to continue to fund these wars, and you know we've already given, I don't know, over $100 billion to the Ukraine with no accountability. Now, I'm not speaking on the atrocities of war or the tragedy of the Ukrainian people or any of this stuff, but it is not for us to do if it at the expense of future generations, where we are completely and totally broke, borrowing money to give to the Ukraine. And worse than that, you know, you have these officials publicly acknowledging that we are literally 10 billion overdrawn in the replacement of our own weapons. So not only are we leaving ourselves in a fragile position financially, but also from a safety standpoint, militarily. We are running out of munitions, and we just happened to find, because of a cost saving deal with our munitions companies, we just happened to find another $300 million worth to give to the Ukraine. And you know, when you talk about the military industrial complex and all of the wars that they're involved in, whether directly with the United States or indirectly, in this case, it just becomes enough is enough already, and especially at the expense of this country, who cannot afford to continue to be the world's policeman. And I find it to be really actually disturbing that we would expose our own safety to continue to fight this war that we should have never been involved with to begin.
Yeah, there's talks now about the Pope was out just last week suggesting that the Ukraine should probably enter some negotiations or some peace talks. And of course, Zelensky kind of brushed it off from the back of his hand, saying, no, we're not into that as well. So it's kind of funny that the Pope is into this now, into the mix. I wonder if there's anything happening right now, maybe on a bigger scale, on the background of currencies. We just saw the Egyptian pound devalued by about 60% here in the last couple of days. What do you make of this move from Egypt? And is this the first of many more of these currencies now rushing to devalue their currency here with respect to not having enough U.S. Reserves? What's going on here in your take?
Yeah, and you also look, they've been buying more gold than at any time ever as well. They are transitioning. In fact, ahead of this move, there was an article that just came out last week saying how much gold that they were absolutely buying. And, you know, look, Egypt is now part of BRICS. And I think that you're going to see a lot of things like this where, you know, they're going to devalue their currency, they're going to accumulate commodities, and ultimately there's going to be a shift away from using the US dollar for settlement. And you can see that when there are shortages of US dollars, the inflation that takes place in these countries. And you know, I think that the world is tired. They're tired of all of the distortions that are created by the West, and this is no different. So expect to see much more of this
Right.
as time goes by.
And with all these shenanigans too, I saw this caricature the other day. I'm like, oh yeah, that's pretty representative of what's happening here. They're throwing our dollars back at us, of course, and they're draining the gold. What was interesting just the other day too, Putin and Xi were announcing this new BRICS international payment mechanism to be announced here ahead with a blockchain based system. What are your thoughts on that? Because we've kind of tracked here in the last couple of months where all these I think there's 300 or so BRICS meetings from here till the end of the year. They seem to be moving the dial forward here in getting outside of the dollar system. Does this lead to perhaps a gold back trading note on the blockchain? What are you hearing? What's the scuttlebutt with this one?
Well, this to me is one of the biggest news stories that I've read since I started talking about the BRICS for a few years. Now, you got to indulge me here a moment and let me just kind of lay the foundation. And I've been saying all of the things that this article is talking about, I have said on your show and others a dozen times. I'm not trying to profess myself as being a prophet or a soothsayer, but I am telling you that this stuff is very transparent and you can see it if you're looking. So let me just start at the beginning here. There was an interview that was done in the Russian news agency TASS by a gentleman who works at the Kremlin named Yuri Ushakov. And he did indeed announce what we've been told by the Russian finance minister for a very long time, that the BRICS nations do plan to develop a new payment system based on blockchain, which of course sets the stage for the continued de-dollarization. We've known that was coming. And he echoed the sentiment and the comments of Sergei Lavrov when he said that it would be a system that would be free from the SWIFT, kind of like the CIPS system, the cross interbank payment system that we've talked about for a while, or the Project M Bridge that we've talked about as well, where we've seen the Project M Bridge is the ability to trade digital currencies with one another outside the SWIFT system, and the CIPS system would be more like the traditional system right now, where they can trade, again, outside the SWIFT system. But what he told us is that the currency would be based upon two baskets. The first basket, he said, would be a basket of national currencies. And we've seen this in a large scale. At the end of the meeting in Johannesburg last year in August, they didn't come back with a common settlement currency. They tasked everyone to go back to the drawing board and come back and present their findings in Russia in October. But in the meantime, they said, let's all trade in local currencies, meaning you have, as an example, Brazil, the second largest exporter of corn in the world, now trading corn and soybeans and wheat to China for yuan. And of course, that's convertible into gold on the Shanghai Gold Exchange. But you're seeing all of these countries that used to settle everything in dollars now settling in local currencies. So the currency, he says, I'll read it. He says, the idea of this currency is that there are two baskets. One basket is of national currencies of all the countries involved in the process, like the SDR, which stands for Special Drawing Rights. That's an IMF deal where all the countries contribute, if you will, currency to the SDR, but with more clear and understandable criteria. The second basket will be commodities. And so we've been saying that forever too. That's what the finance minister told us. One will be local currencies, one basket, and one basket will be commodities. And undoubtedly gold will have a very heavy role in that, as it is the only other tier one reserve asset on the planet. And all the central banks have been buying it. You can see all this coming together. But here's where it gets, well, the two other things, it gets really interesting. He says it will be in a digital form. Now, we've known that. And that he says it will be used without the banking system, so transactions will be 10 times cheaper, all of that kind of stuff, right? Don't have to use currency exchanges. Well, that's the Project M Bridge. These are the digital currencies that can trade with one another, sidestepping the SWIFT system and not settling in dollars. Huge. We've all known this, right? But here's where it gets interesting. Now, I have been saying for a very long time that the Western system is manipulated and that they know this. And I've always likened it to jiu-jitsu, where you use your opponent's leverage against you. And people get very distraught about the price of gold and silver not performing the way that it should, counterintuitively. What the heck is going on?
Mm-hmm.
And I have an answer for that too. But anyways, the bottom line is they understand this too. And I've said there will come a time, whether it be the Moscow Metals Exchange, the Shanghai Gold Exchange, or the exchange in Dubai, where right now in Shanghai, we've talked about how they are slowly turning up the arbitrage sheet, that they're pricing silver 10% above the Western price, almost $3, to siphon anything that can be purchased in the West and delivered in China. Same thing with gold, 70, $80 higher. They're slowly turning up that heat to entice the traders who have access to both of those platforms to buy in the West and sell in the East for delivery. We've said all of that. Now, let me read you what he just said. And I want you all to think about this in terms of misdirection, in terms of the art of war, in terms of beating your opponent without throwing a punch or using their stupidity and their leverage against them. And that's what they're doing to us right now. So he says the second part of this currency or this program is price. Now, here's where it gets interesting. For the moment, price is determined by Western speculation. That's interesting. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. During the COVID pandemic, the price of oil fell to nearly zero. Now, actually, it fell to negative $40 a barrel. And this is how stupid it is when you have the futures exchange that can control the price rather than the underlying commodity.
Right.
So they were, in essence, back then paying people $40 per barrel to take the oil. So he says it's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Price formation with this new currency should get rid of Western exchanges of commodities. One more time, price formation of this new currency should get rid of Western exchanges of commodities. You see, they know what we're doing. They know that we're suppressing the price to make the bond market, the dollar, and the Western system seem better than it is. But let's make a distinction. It's not just precious metals. We've talked a few weeks ago how the Chinese bought the London Metals Exchange, LME.
Right.
Now, that is primarily base metals like copper and zinc and lead and steel. So not only do they own the LME, but they are now warehousing metals that are traded on the LME in China. So it's not just precious metals, it's all the base metals. And lo and behold, what do you know? The BRICS just proposed a grain exchange, likely to change the face of the world grain market, because as they say, the global prices are primarily determined by the Chicago Commodity Exchange, and we don't want this. So what you are witnessing is classic art of war, misdirection, using the leverage of your opponent against them, and they are draining the exchanges across the globe of everything. In fact, we just saw an article where China just canceled massive amounts of contracts in corn and in soybeans and all sorts of soft commodities to the U.S. Farmers, and they're now buying them from Brazil, who is selling soybeans and grains and corn to China in yuan, which they can convert into gold if they want. They are sick and tired of the fact that the West can control the prices, and it's not just going to be in precious metals. It's all of the commodities, from soybeans and corn and grain to precious metals like gold and silver to all of the base metals. Do you understand what's happening here? We are being literally tricked into continuing this ridiculous system of suppression of commodities right into the hands of the BRICS, who not only will control all of the world's commodities and shipping lanes and production of these commodities, but they will also then control the price of them all, because the exchanges, like in Dubai, like in China, and like in Moscow, will set prices far higher than what the West lists them at, and the West will be rendered obsolete and a scam, and it's coming. And I think people need to really listen to what he said. They're acknowledging it, and I find it to be the most important article I've read in over a year.
For the moment, strikes.
Yes.
Yeah, that's an important one. Speaking of prices, of course, the consumer price index also skyrocketing here. The inflation hot. Consumer price hit new record high, up 19% since Bidenomics began. You also sent me this article here. Prices climbed for the third straight month, hitting 5.4% year over year. Now, how is this happening? Are we already seeing, is this more of a result of the degradation of the dollar? the rejection of the dollar, a combination of those effects, or also because we're starting to see now the arbitrage and people not playing the same games here in terms of price setting here and putting and bidding up basically the control structures of every price of our commodities here. How do you see this
Yeah, that's a
transpiring
large
and where to go from here?
Yeah, that's a large part of it, and that's a great way of framing it. Indeed, the price of commodities will continue to move higher and higher and higher, and that will only put greater strain on inflation and on the cost of services. Look, the bottom line is that we're being lied to on inflation,
Mm,
and you even have Janet Yellen coming out in public and saying, "I wish I never said inflation was transitory." Well, right, and we're not being the things that are really inflating, like services, are not included in it. Neither are food or energy and housing.
mhm.
Well, what's going to go higher? Well, that's going to be food and energy. And in terms of housing, look, it's inflated because there's no one wants to sell their home right now if they're locked in at a 3 or 4% mortgage. So the prices are still inflated. The bottom line is that when you create as much money, trillions and trillions of dollars as we have over the last several years, and then you have things like the BTFP, which just ended yesterday, where they injected, I don't know, $1.7 trillion into the system to keep liquidity going. And you have all of these injections of liquidity and suppression of interest rates. We haven't even seen that run through the system yet. Inflation is not going away. In fact, inflation is here to stay. And I think it's only going to get higher, especially as these countries start to price commodities independently of the US dollar. And you're going to see the price of oil go higher. You're going to see the price of all basic commodities like copper go higher. And inflation is not going away. And so when they talk about lowering interest rates, no, that's not going to happen. I think you're going to see higher for longer, which then puts greater strain upon the banks and the commercial real estate and all of these things. It's accelerating. And look, inflation is not going away. I don't care what they tell you. In fact, it's gone higher at a 5% annualized rate. And so there's no way that they pivot and lower rates when they're double their target of 2%, almost 2.5 times their target of 2%. And that's if you believe the numbers they're telling you. As we've
Mhm.
said many times, and I was on, I think, this show with you and John Williams, who everyone should check out his website, shadowstats.com. He'll tell you
Yep.
inflation's 10 or 11%. So,
Yep.
yeah, it's just the media is not being honest with us.
Can we look at the banks for a moment here? You just talked about this emergency fund lending effort ending here. I think it was this Monday. So on one hand, the liquidity issue seems to be exacerbated by the fact that they're running out of sources to kind of shore up their efforts. And on the other hand, here in Canada, for example, the Superintendent of Financial Institutions, this is our regulatory body that provides the stress tests for banks here.
Mhm.
They've directed our banks here to begin assessing risky mortgages and estimating potential losses effective immediately. So they're looking at all of these mortgage defaults right now that are skyrocketing. And what was interesting, there was a comment here earlier about 50% of mortgages here in Canada are going to be due here in the next 2 years. A lot of them at double, triple the prices with the new interest rates being set here over the last 2 years. So on one hand, we're seeing the liquidity issue and the borrowing and the ability to borrow diminish, and on the other hand, we're seeing consumers give their keys back to the bank and say, "Yeah, sorry, I can't pay." What's going to happen here with the banking level? We seem to see this war being played out here, and is this move by the Fed to close this window here an attempt to maybe choose favorites and start cannibalizing the banking system? Is that what we're seeing?
100%. I mean, and maybe this is not a correct analogy, but just off the top of my head, because just thinking about it, I almost think like the residential real estate in Canada is similar to the commercial real estate in the United States. In the United States, people have 30-year mortgages, and most of them are locked in at 4% or less,
Mm.
and at 30 years. And so it's created a little bit of a stagnant, if you will, in the residential real estate. People don't want to move because you can't take that mortgage with you, and they're now at almost 8%. So they're going to stay where they are. In Canada, if I'm not mistaken, these reset every 5 years. Is that correct?
Uh, yes, and you can have the option of 7 years too at a higher rate, but the average is around 5 years. Yes.
Right. And
Yeah.
so all of those loans that were written 5 years ago are
Mhm.
now at much lower rates, are now coming due at much higher rates. Well, that's the exact same thing that we're seeing happening in the commercial real estate market in the United States. The only difference is that much of the commercial real estate is found in cities that no one wants to be in, like San Francisco, where you just saw a massive REIT. I think it's called Pinnacle, I think, in New York City, which is a real estate investment trust, a REIT. They just handed over the keys to two very, very large, huge skyscrapers, handed them over to the bank because the cost of maintaining the loan is more than the buildings are even worth. They've already valued it at zero on their balance sheet and just gave back the keys. Or it's just like the Xerox building in Washington, D.C. that just sold for about 10% of what it sold for 20 years ago. Or all of these large buildings, you're just finding real estate investment trusts are leaving the keys with the bank and walking away. But the thing is that all of these banks, the majority of the commercial real estate loans are held by 70% of them are held by the small regional banks. And so when you realize the strain that will put on these banks as more and more of these companies have to refinance the commercial real estate loans at much higher rates, it's big problems. And then think of all the businesses that spring up around it, around the centers of commerce. You have restaurants and bars and shops that are all same thing. They're all banking with and have loans and leases through the regional banks. And you put it together, it is a powder keg waiting to happen. But that's exactly what they're telling us. You have Jerome Powell saying there'll be bank failures. He's admitting there will be bank failures. I've seen as many as 500 that they're talking about banks failing. They are waiting for this to happen. Consolidation is exactly what's going to happen. And yes, it's almost as if it's too stupid to be stupid. They've incentivized these banks for years to take on tremendous amount of duration debt. In other words, when the interest rates were zero on anything short term, when you would deposit your money in the banks, they would take that money and buy 10-year treasuries because that was at least a little bit of return. Well, those 10-year treasuries are completely and totally underwater right now. So you have all of these banks that are massively over leveraged and undercapitalized, and there will be a tipping point. And I think it will start with the commercial real estate as these companies just give them back the keys and say, we're out. Because what is the one characteristic of commercial real estate? It's non-recourse, meaning here you go, here are the keys, bye-bye, nothing you can do about it. It's not like residential where they can, you go bankrupt, they'll come after you. But in a business, those loans, almost all of the commercial real estate are non-recourse. So these companies just say, yeah, it was this crappy investment. We lost a ton of money, but I'm not going to continue doing stupidity. Here are the keys, buy. And the banks then are left with an asset that's worth pennies on the dollar, and their loan book blows up. The systemic chain reaction of that is something we should all be concerned about.
Yeah, it's like 2008 all over again and maybe on steroids. This could be also why we're seeing all of this pressure now on precious metals prices. This Kisco article was interesting. Gold shock rally has analysts grasping for an explanation. What's going on, Andy? Frank Justra on his Twitter was saying, well, the real reason for gold sharp spike here is something we'll only discover much later. So he's just describing that there's something happening in the background that most people who are not sophisticated, not watching these shows, don't understand right now. This is still being obfuscated for the most part, but the big players know, and we're just seeing now also Costco, I think it was, moving into silver coins also. Let's see if we can find that article. So they're positioning themselves here also. I want to have your take on this. David Morgan just put this out the other day too. Costco is now selling bags of silver coins for $6.25. So they're understanding there's something happening in the background here. What's Justra talking about here specifically? He's saying that we're going to understand this later. Is he talking about the inflation, the de-dollarization, or is there another move also that's putting pressure here that is not really understood right now?
Well, there are some people that I'm reading that will tell you that the cartel banks have realized that they can't continue to suppress the price and that they're doing the best to run for the hills. Okay. When you get through all-time highs and you reach a level that there is no resistance above it, who knows where it's going? But let's look at it from a different perspective, right? So unlike the euphoria surrounding the stock market or surrounding the crypto markets, there's very little, if any, reporting of gold. And, you have a gold right now where the central banks are buying all they can that isn't nailed down, buying more so than any time in history. And it's up $350 in the past 6 months. That's a 20% increase. And so 6 months ago, the price of gold was $1,820, and today it's just under $2,170. So even with all of the manipulation to keep the price down in the past 5 years, Gold has risen from 1275 in March of 2019 to 2180 last night. That's a 70% return. You divide that by 5, that's a 14% annualized return when nobody is talking about who's been buying it all if it's gone completely and totally ignored. And I think it's also important to note that, you know, the people in the know, the billionaires, well, they've been dumping stocks almost as fast as the central banks and major banks have been buying gold, commercial banks. So are the billionaires buying right now? Because they only have to report their sales. They don't have to report what they did with the proceeds. So
Right.
who's buying it? In my opinion, it's the BRICS nations. It's the central banks who understand the playbook. It's the billionaires who are selling their positions in stocks that have been going parabolic. And it's all, you know, look, the thing to do is to do what the big money is doing, not what the public is doing. The public has been buying the S&P and the NASDAQ and has been shedding or not even talking about gold. At the same time, the big money in the know, and it's not just big money, they're the most informed. They know what's coming. They're the ones who have the playbook. So they're selling at the top when everyone is wondering why the hell are they selling and building bunkers. And at the same time, you're seeing more people across the globe in terms of central banks and commercial banks buying more gold than at any time in history. My guess, it's symbolic of the biggest money in the world accumulating it, and the fact that most people have no idea what's going on. Well, how is this happening? Look, we've been talking about this on your show for 2 years now.
Yeah.
Your readers understand, your listeners understand what's happening. It's just that the mainstream public doesn't. It's the central banks, as far as I'm concerned, who are the most well-informed traders on the planet.
Right. Let's look at silver quickly also here. I saw a video from Bixweir, I think it was earlier today or maybe it was yesterday, talking about these daily moving averages and how right now we seem to be at that line again, but we haven't seen the typical smash down. This might be referring to what you just said there about the abilities of these banksters to reduce the price and smack it down. Are we at that point now where they can't do that anymore, or if they can, it's like very short lived, or do they still have the abilities maybe to really drive the price down here for another period of time as we're seeing this huge arbitrage opportunity in the east that seems to be becoming more and more difficult by the day? What do you make of this moving averages and why we're sitting close to 25 here still today in silver?
Yeah, that's the point. It's as dumb as a mud wall to try and suppress or short, naked short, meaning you're just shorting it because you have a lot of money. You don't have the commodity behind it to deliver if called to the carpet. But to short a market that is gaining such global demand through the biggest players on the planet is ridiculously dangerous. And so, yes, to discount the ability of the commercial banks to suppress the price of gold would be a very big, and silver would be a very big mistake, because they still are, you know, the biggest traders on the block. However, I think there comes a time when even these traders realize that this is a game that isn't worth playing. This is a game where you can really, really get hurt. And as I've mentioned before, the interview with Chris Marcus and Bart Chilton, Bart Chilton admitted in that interview a week before he died that Bear Stearns went out of business because silver went from $9 to $21. And their naked position was so large that it immediately rendered them upside down. So
Right.
there are going to be a lot of players hurt in this when the price fully accentuates itself. And I'll say it again and again and again. The only way to manipulate a market over a very long period of time is to push it in the direction that it is going. Most of my career, people didn't want gold and silver. For the last 30 years, people wanted stocks, bonds, and U.S. real estate. That's what people wanted. And rightfully so. It was some of the greatest bull markets the world has ever seen. But everything is cycling. And I think when you realize that the world is now moving away from debt instruments, they're moving away from things that are opaque and moving away from things that have counterparty risk into things like gold. And I think that's also emblematic of the treasury market. These countries are no longer wanting to hold a treasury debt of a country that has a spending addiction that will have very big questions surrounding our ability to service that debt, to pay it off. I mean, how do we ever pay off $150 trillion in debt, both funded and unfunded? And then you have the issue of confiscation of assets, like we are Janet Yellen in Brazil, in the backyard of Russia, member of BRICS, saying, yeah, we should really confiscate the 380 billion in Forex reserves. You're telling the world that we can't be trusted, and that if you end up on the wrong side of us ideologically, your money's ours. And so why would they want to hold our treasury debt? We're broke, we're insolvent, we have a spending addiction, we lie, and we're hypocritical. So these countries are shedding bonds and buying gold, which has greater track record in terms of performance over the last 25 years than the bond market does by a long shot, has a much longer historical footprint as wealth than a treasury bill would or treasury bond, but does not have the counterparty risk of default and confiscation. So yeah, I think what you're seeing is the biggest money in the world seeing the writing on the wall, front running the acquisition of gold and silver. And just like the finance minister for Russia said, they understand that the price is being suppressed. So rather than bitch about it, use it against us. And then when there's no metal or any commodity left to be delivered at the Western make-believe prices, just like that, they flip the switch and another system takes over for the global price setting mechanism of the world. And when you realize that these countries combined control the majority of human population, let alone the majority of all the commodities that are being priced in Chicago and London, yeah, it's a losing game that is running out of time. And you wouldn't want to be on the wrong side of that, JP. You just wouldn't want to be, or JC, excuse me, you wouldn't want to be on the wrong side of that and be short, naked, when the rest of the world sees transparently what's happening.
I want to be at the last minute trying to buy insurance when this switches over. That's the whole point. And going back to this video from a big square here, talking about the silver announcements that's going to happen. So we have right now this huge fight that's happening, regardless of the fundamentals and the huge demand coming up for solar and silver. Speak to that now, like in terms of the fundamentals for silver. Yes, we're seeing all these currency wars happening here and the control mechanisms moving east. But on top of that, demand is growing. And so far, at these prices, we're not seeing new mine development. All the top stuff easy to mine has been mined. So we need much more higher prices to get more silver into the market. So at some point, the rubber hits the road here too, just from a fundamental standpoint. Speak about this solar silver announcement coming up.
Yeah, we're in a structural deficit now. We're going on 2-3 years in a row of over 200 million ounces shortfall in silver production and in versus demand. And in a world that is going green, in the world that is moving to solar, in a digital world where everything is digital, where everything is electronic, the need for silver is extraordinary. And I say it again: the Silver Institute ignores the military-industrial complex role in all of this. They don't even mention silver's role in munitions, and I don't know if that's purpose or not. I believe it probably is, because look, as I mentioned, when I spoke in Vancouver, I was approached by a man who works for the Department of Defense, and he said, "You're right. There is almost exactly 500 ounces of silver in a Tomahawk cruise missile, but that's just one. What about all the other missiles that are being and munitions that are being produced, or the high-tech aerospace stuff? The need for silver is extraordinary." Yeah. Silver is an asset that is increasing, and that's why the folks in Canada have petitioned the government to label it a strategic metal, not an industrial metal. Silver, it has the greatest asymmetrical risk-reward profile I've ever seen in my life. And that is, what asset can I own that has the lowest downside and the best upside? I think objectively, I don't know that you could find a better asset on the planet that offers that profile.
What are we at now for the gold to silver ratio? What do we stand at today?
We're at 25 on silver, and let's say 2160 on gold. So yeah, 2160 divided by 25, that's 86.4. So it's coming down a little bit in favor of silver. But from historical context, when I first did a video with Bix, the first video I did was 2010, and it was with Bix, and I called him up and I said, "Bix, buddy, look, man, we got 85-1 gold to silver ratio. It's the second time in human history it's ever been that high." So we did a video and we told everyone to sell their gold and buy silver. And anyone who would have done that, in theory, almost exactly where it is now, would have got 85 ounces of silver for each 1 ounce of gold. Within 7 months, you had $50 silver and 1915 gold. That's 37-1. Yeah. Anyone who would have traded 7 months later could have got back almost 2.5 times what they started with. Right. The law of averages is real. And anytime you get that far away from historical averages, the greater the magneticism that pulls you or aggresses you back to the mean. And so, BICS will tell you that at 86 to 1, this is like 1/5 of 1% of the time in the last 100 years. It's an anomaly. Asymmetrical risk reward. Yeah, you have history, you have mathematics, you have geologic truisms all on your side here that silver is probably the finest asymmetrical risk reward investment I've ever seen. And I think there will come a day when we wake up and we see the fact that the West and their suppressed markets are no longer accepted globally. And that's why it's already $3 higher in Shanghai. What if they turn it up to $13 higher or $20 higher to set a realistic price? And bang, just like that, the markets blow up over here and everything moves over there. And that would be still undervalued. Because if you realize the price ratio has averaged 42 to 1 for the last 100 years, you take the price of 2160 divided by 42. And if you woke up tomorrow morning and silver was at $51 an ounce, it would be 6 times undervalued. Why? Because it's coming out of the ground at 7 to 1. So take 2160 and divide it by 7, and you get $308. Now, if we woke up tomorrow morning and silver was $308, people would say, no chance. Well, really? At what point does the geologic ratio have to come into play? At what point does you have to price it as a reflection of what you're pulling it out of the ground for? So when we talk about, where it could go, is it pie in the sky or is it really reality? And I would say to you this, that it is a logical assessment to say silver should and could very easily be $300 an ounce just based upon its geologic footprint. Asymmetrical risk reward. How much lower can it really go? And how much higher should it go? I don't think you've found a better asset on the planet.
Some technical analysis guys were saying that maybe April or May, like in that time frame, we could hit the 40, 50, $60 in silver, and then who knows, the sky's the limits once we hit that all-time high. Do you see that close, that could happen right now with everything happening on the geopolitical front and also on the fundamentals? Are we that close to something breaking here in a big way?
Yeah, I think what is close to breaking is the trust in the U.S. dollar and in the U.S. markets.
Yeah.
And yes, this is all a function of trust and a function of commodities being priced in dollars. And gold, I have a better gauge with when we talk about in its relation to other countries. But if you look, gold is already and has been for over a year now priced at all-time highs against every currency on the planet, long before it reached its all-time here in US dollars. The point of it is that when the dollar collapses, and I believe it will ultimately, and it's almost as if we're trying to incentivize that. We've talked about that at length. It's too stupid to be stupid. The things that we are doing outside the country, weaponizing the dollar, signing an executive order to go green, bullying and coercing the world. At the same time, we let our country become the laughingstock of the world in terms of elections, in terms of border, in terms of wokeness, in terms of justice department and two-tiered justice system. All of this stuff, the world says, what the hell's going on in the United States? Very quickly, you could see a shift away from the dollar, away from the Western system, because as they're telling us, they already know our markets are gamed. So, they know the dollar's gamed. They know that if you end up on the wrong side ideologically of the West, you're in big trouble. Yeah. This is just a matter of time. But like everything the BRICS have done for the last 17 years, they're doing it in a methodical, adult fashion. They are waiting for mass adoption in crypto speak of not only the BRICS in and of itself, but the fundamentals that they are trying to build on. And when they reach that moment where they are they're already responsible for more GDP than the West. They already are producing more of the world's commodities than the West. They already have a larger swath of human population. They already have a larger sampling of nuclear arsenals between Russia and China. I mean, you keep going down the line, they are already very formidable. What happens when another 35 countries have already formally applied? What happens if we get 50, 60, 70 countries in the next 2 years or more who all sign on to BRICS, including Mexico, the largest producer of silver, who has expressed interest in joining the BRICS? Yeah. We're reaching that point of mass adoption, and that's when things change overnight. So all of these things we talk about is little by little by little, then all at once. And if you don't see the little by little, you're not paying attention. but they're doing it the right way. They're doing it in a manner that allows them to, when they finally say, we're going to stand up, that they don't have to worry about their backside because they know that they've got it covered in every single capacity. And
It'll
I
be
give them
cornered.
credit.
Yeah.
Yes,
Yeah.
I give them credit for that.
Yeah, exactly. As crazy as this image is, so this is 1929 versus 2023. You can see here the gold coins and representation in US dollar. This does not account yet for all the money printing that we've seen over the last number of decades. That accounting is coming at some point. And before we get to that, again, it's a good idea to get your positions and to see what the big money is doing around the world. Andy, you've got some cool new products this week. I saw that you have some junk silver back in stock here, as well as these pre-33 gold liberties. Talk about that.
Yeah, I wish I could send the pre-33 Liberties and the junk silver up to all of you people up in Canada. I can't. I did have one client once want them so badly, the pre-33 Liberties in higher grade. They were MS-64s. And he paid a 13% VAT tax at the border because he didn't care. Well,
Yeah.
most people shouldn't do that. So when you talk about sending the one common, in fact, all three of those items I can't send to Canada. And it's weird because Canada produced the only coin that I can think of, palladium. They made the palladium maple leaf, but they do have a VAT tax on importation of palladium. Also, the pre-65 silver, just like the pre-33 gold, they're not pure gold nor pure silver. There's alloy in them. Therefore, there is a VAT tax at the border. But for people in the United States, I will simply say this. If I had my choice 100 times out of 100, I would buy the pre-33 gold coins if the prices are commensurate with gold bullion coins like they are. For the last 4 years, they've been stratospheric. I wouldn't even have promoted them.
Right.
They are my favorite way to own gold for a myriad of reasons, not to mention they're just a very cool piece of history.
For sure.
In that grade, those are AU grades, means almost uncirculated. They're circulated, but those were in someone's pocket 100 years ago. Yeah. Same thing is true with the pre-65 silver, dimes and quarters minted prior to 65. Those, that was legal tender. They're circulated, was in someone's pocket, but there's 90% silver by weight. It is the most flexible way to own silver. And the reason we put palladium on there is that for the last several years, palladium was out of sight price-wise, and it was too high to recommend. It's come way down, and it's worth considering adding a few ounces to what should be a very small part of your metals portfolio. To me, it's a tertiary at best. Gold and silver 1 and 2, and platinum maybe even number 3. Palladium, intriguing, been too expensive, but at this rate, I'm willing to buy them. And that 119 over spot, look, there's very, very little palladium out there to buy. So you're going to see higher spreads. They haven't made the maple leaf in years. If I were going to buy some palladium, this is the way to do it in certified bar form, and not a bad idea to add a few ounces to your portfolio.
Hey, before we go, we're 42 minutes in already, man. Time flies. I wanted to ask you, a lot of people ask now, they're getting attuned to this, they're seeing the news, they kind of feel something's wrong, and they're starting to follow these podcasts. And as they get into it, we didn't talk about Bitcoin today. Maybe we'll get back to that next week. We're sitting at 72 or 73,000 here today. A big indication also of the pressure here on the downside for the US dollar and its dominance. But going back to de-dollarization, when people get into that, they're asking themselves, hey Andy, I'm just starting on this, what do I do? What's that split? Do I do 50-50 gold and silver? You just added the palladium to that there. What's the general rule of thumb? And I know it depends on your risk reward ratio, how old you are, how much you want to risk and all that, but typically when you start into this here, are you doing a 50-50? Are you doing 70-20-10? What are you doing here with these three metals for the audience? What would you say?
Absolutely. And real quick to Latro, it's called AU. That is the grade, almost uncirculated. It is a grade that is not quite uncirculated, but that's actually the way the market called it, AU. Mm-hmm. And as far as which is the way, look, there's no protocol, no set protocol for success or established criteria one needs to follow. I mean, first off is that, to me, they're both wealth. They've been wealth for 5,000 years through everything the world's thrown at them. Gold is the item that most of the central banks are accumulating and considering wealth. And I would argue silver is too, but, look, to me, the real value is found in silver. It's a once in a generation, certainly once in a decade opportunity. The difference also is that, I could have $40,000 worth of gold in my fist right here, 20 coins. $40,000 worth of silver is going to weigh 110, 120 pounds. And so when you talk about logistics, that becomes an issue as well. And I find it very, very hard to ignore the asymmetrical risk reward value in silver. It's the most undervalued, underappreciated, most important asset on the planet. But in the end, and this is where Bix and I can slightly disagree, and I love him like a brother.
Yeah.
I think in the end, if I had one trade to make, I'd buy gold. If I only had one, and that is because it is the asset that the central banks are calling the only other tier one asset. If I had two trades to make, I would load up on silver. I'd wait for the ratio to fall back, not only to historical means, but maybe even closer to geological means, and trade into gold and end up with anywhere from 2 to potentially 11 times more gold than you could have otherwise bought today without spending a penny. I look at that silver to gold trade as the trade of a decade. And, but again, to me, in the end, gold is the place to be. Silver is has the greatest potential of any asset I've ever seen with the lowest downside risk.
Okay. Well, that's great advice. Thank you so much. Anything else you want to add today? We went through pretty much all the news articles there. What are you looking for maybe for next week or in the next couple of weeks here in terms of announcements or news items that might change the game here? Is there anything on your radar also you want to share with the audience?
Couple of things. One, I'm going to be in Europe for the next 2 weeks, but I would really like to continue to do the shows. I'm just going to have to work with you on timing and try to make it right. And I have some interesting things that I will hopefully be announcing while I'm there. I have some very interesting meetings and whatnot. But look, I guess the only thing that I would say people need to keep an eye on is, look, we have 185 more meetings or so between all BRICS related in Russia between now and October. All of them. Every day there's going to be something new. We have the election in November. And look, we have 12 million people in this country illegally. If, again, 1% has bad intention, that's 120,000 people. And when you get Christopher Wray, the head of the FBI, testifying in front of Congress that he's very, very, very concerned for homegrown terror, well, geez, I wonder why. And I'm concerned that there'll be a lot of things to think about and keep our eyes on as we get closer and closer to the election.
Right.
This might be the most important election this country has ever had for many, many reasons. And I don't think that things are going to go smooth sailing between now and then. There'll be lots to talk about. But this is the reason that I tell people to own precious metals now, because I think that everything that we understand as a system is going to be called into question very, very soon, whether it be by force of the BRICS or whether it be by the forces of Mother Nature, of economics, where all of the leverage that we have created through suppression of interest rates and trillions of money creation will come home to roost. So yeah, I hate to be doom and gloom, but I'll tell you what, things are starting to get real. And I have a feeling that because of the BRICS meeting in October and all of the meetings leading up to it and the election in November, that things have been accelerated. So
it appears that
you know what, stay vigilant and keep your eyes open and build your community.
And build your precious metals portfolio while you still
can. I look forward to running shotgun with you, JC. I mean, I love being on your show, and I think there will be a myriad of things to talk about every single week, all of them related to this one linear progression of events that's accelerating.
Right. Accelerating it is. Thank you so much, everyone, for joining us here today on the live interactive show. Join me again at 4 p.m. Eastern for the Beyond the News edition. We're doing it at 4 p.m. today instead of the 8 p.m. Show time. So please join us here in about 3 hours or so. We're going to do a special show on the eclipses, and Meg will be joining us for that one as well. Thank you so much, everyone, for joining. Thank you, Andy, and I hope you guys have a great day, and we'll see you soon. Au revoir.
God bless.